GMGM fam, today is Friday, May 16th, 2025, and Fridays mean Llama Party. So grab a beverage, kick back, and let's have some fun. Let's recap everything amazing in crypto. And this is coming to you a little bit later this week. Usually we do it like 7 in the morning so that we can wrap up the ad auction for the week with some intense bidding activity at the last minute. But once again, the winner at the last minute was AIOZ. So click on that QR code to check out all the action from AIOZ. You can learn more information at the top of leviathannews.xyz. AIOZ embodies the decentralization we've all been looking for in terms of storage, AI compute, object pinning, and more with the AIOZ DEPIN network. That's decentralized personal identity network, I believe, spread across hundreds of thousands of edge nodes. You no longer have to bend the knee to Bezos and the technocrats. Much more information right there. And if you'd like that, we do auctions for this inventory every single week. So check out the Squid Pass auctions live at leviathannews.xyz. With that in mind, we are delayed this week because we wanted to speak with someone we've been trying to get on the podcast for quite some time. If you've been following stablecoins, you'll know that the only way that you can profit off of the stablecoin narrative is to bet on the underlying protocols, particularly the decentralized ones that are trying to launch their own decentralized stablecoins. And Open Stablecoin Network has done so. OXJMG, you are one of, if not the driving force behind Open Stablecoin Network. How do you like to pitch this? How do you like to bill yourself?
I like to just call myself a humble community contributor.
A community contributor. I think many of us probably fall in that bucket, right?
Yeah. I think there's something I think quite interesting about that, especially if it proliferates and we get more community contributors. It's definitely going to take a village. But yeah, the Open Stablecoin Index is a equal weighted basket of 8 decentralized stablecoin projects. The ticker is OPEN. It's available on Ethereum mainnet. The website is openstablecoinindex.com, and you can learn all about it. One quick thing to say about it: people often ask, why was it created? Why do this? And I think depending on which contributor you ask, they might all have different answers, which is totally cool. But one of the big things that's happening right now in the stablecoin verse is a lot of attention on central issuer stablecoins like Tether and USDC. One, because Tether is so incredibly profitable, and two, because Circle is thinking about going public. And then next to that is stablecoin regulation coming forth in the United States. And that's all very exciting. Lots of announcements, Stripe making announcements, MasterCard, Visa making announcements. But one of the things that strikes me as really interesting about this is thus far, stablecoins have primarily been used to bridge the crypto world to the TradFi world. And one of the major use cases, that lots of people are talking about is mostly patching the TradFi stack. And that's cool, because that's a many $1 trillion stack. And you can see why the capitalists might want to chase that. But when you look back at technology's greatest inventions, stablecoins are just 11 years old. When you look back and you look at their first 10, 20, 30 years, they tend to be patching something. And then they really break out into what they were going to be when they grow up. There's another storyteller out there, storyteller/entrepreneur that I like, Luca Prosperi. He's at M0. He has something called Topology 5, which is this idea of distributed issuance. I'm going to misframe this, so I won't try to, but I think he's from his viewpoint, we're on Topology 1 for stablecoins right now. You go find his paper. Topology 5 is really the grand prize, and that's something that's going to unfold over the next several decades. And my hunch is the people that win that, their names will not be Tether or Circle.
Got it. So you're actually predicting that the kind of open stable coins, let's call them like Curve USD, Go, they might actually pick up steam and surpass Tether, and maybe we'll call them closed stable coins.
Yeah, they are picking up steam, and I think what we haven't seen yet is a lot of new killer apps in crypto recently. right? I think DeFi Summer was pretty innovative. Like, someone invented self-repaying loans, and that's like, wow, that sounds pretty cool. But even that application hasn't sort of, gone gangbusters yet. I was listening to a podcast this morning, actually, that had a lawyer speaking. He's like, yeah, all the stablecoin networks of the last 5 years have been designed by lawyers, not product people. So, and that's changing, right? Now those frictions are kind of coming down where innovation can really, run freely. And yeah, to answer your question, I think what we're going to see is some extraordinary inventions happening in the crypto space that require on-chain stable coins. They won't work with a central issuer stable coin. And probably one of the major catalysts of this is what I would call kind of the coming machine economy, machine finance, protocols, AIs, and robots self-coordinating. Um, the more autonomous they are, the more creative they are. We've already seen what a few AI agents have done just with Twitter. Can't imagine what they might do with a bunch of permissionless protocols on their own. Obviously, there's some safety concerns there, but as there is for any new technology invention, that has to be moderated.
Got it. Got it. So if we were to take a look then at the stable coins circulating, I don't know about you. I probably check this like every single day. I should just make this my homepage.
Yeah.
You cited DeFi Summer, and then one of the interesting things about stable coins is there was a pullback over the course of like this extended DeFi winter that we went through from 2022 down to 2024, but it wasn't that dramatic. Like the peak was around 187, and it collapsed to 123 million, 123 billion. But since then, it's been up only, and now we're at 243 billion. Now, much of that's been Tether. Tether is 150 billion. Is your prediction that Tether is likely to just kind of like dwindle or fade into irrelevance and just gets surpassed by open stable coins? Or do you think that like Tether's going to keep growing? It's just that the decentralized stable coins are likely to go at such a gangbusters rate that Tether is going to be like dwarfed.
Yeah, it's really hard to say. I am not a predictions guy, really. Especially not a specific predictions guy. I'm more of a optimistic future guy. And it sounds very radical that someone's just going to beat Tether sometime soon. But that's the way people felt about AOL and Yahoo in 1998, and those companies are mostly forgotten now. I think one thing that's different about stablecoins is because, in particularly central issuer stablecoins, it's a regulated industry. What could happen with Tether and Circle is for sure some regulatory capture. In fact, you know, not the predictions guy, but I made this prediction a few months ago. Tether's going to come under the US regulatory umbrella in some shape, form, or fashion because they want access to the US market. And that's what it'll cost to do that. It'll be smart for them to do that in some form. So, once you've kind of locked into regulatory capture like that, or like Circle is the way they've approached it, that gives you some staying power. As we all know, there's a lot of things in the government that are not great, but they're here forever. It's very hard to get rid of them, whether it's buying hammers for $500 or, a healthcare system where somehow, they're charging 3 times more than what it would cost me to walk into the place and do it myself. So I think the regulatory capture aspect for central issuer stablecoins is for sure a factor. What I'm really kind of saying is, and there's about, I don't know what the number is today, 22 or 24 trillion dollars of M2 money out there. That's a massive opportunity, and stable coins are what, like you just reported, 240 billion. So stable coins are about 1%, I think, of M2, if I'm doing the math right, which I'm terrible at math in my head. So there's a lot of market opportunity to capture. If you're a venture capitalist or if you're an entrepreneur trying to make a name for yourself, and you've got the relationships, you go get a piece of the $22 trillion. But the other side of this is the sort of dreamers, the entrepreneurs, the ones that are thinking about rockets in space, um, and inventing something completely different. They believe in a different system. That is where we're going to see some innovation that is just going to be jarring at first. Um, and I think, recently, we just saw here in the last couple of days, the Coinbase hack, which is really a future of account based future or wallet based future. And there's been a lot of good things shared. I saw a really good tweet by Mark Zeller and a few others. The best way to not get data hacked is not to collect it. And we kind of undervalue that right now because we're all used to giving up our data to everybody, every bank and utility bill and tax guy and all that kind of stuff. But it really is a serious threat, especially now in a world where crypto people are getting hunted physically and kidnapped. It's quite scary. And I think in the future, being doxxed and having it tied to all of your accounts is people are getting more and more educated about it. So if for no, maybe privacy is the killer app, it might be, but I think there's going to be some other really interesting innovations, just as we've seen with things like borrowing from your ETH balance to run transactions on a debit card, or self-repaying loans. I saw something else the other day, but I don't even understand it yet, so I'm not even going to try to articulate it here. But when I saw it, I thought, oh wow, this is one of those types of innovations that goes far beyond how do we use stable coins to make TradFi more efficient.
Got it. And just while you're talking about the subject of safety, this is a headline that was coming in the past couple of days. Coinbase was seeing that they actually had like cyber criminals bribing some of the overseas support agents, which is like one of the like real crazy things that I don't think people realize. If a bull market is coming, you kind of get in the situation where there is like need to like pay people crypto exorbitant salaries, because like that's the price you have to pay. Otherwise, like they are going to like get recruited by some of these like nefarious agents. So it's bad news for Robo Odin, who's watching us with a few hundred other viewers on X, and says CurveCap constantly has me send my social security number. Yeah, that's correct. If you want to actually listen to this podcast, you do have to KYC yourself. So make sure to head to leviathannews.xyz and drop all of your personal details there. But he goes on to add that we really are at the start of a financial revolution, which I think is very true. So let me bring up the bear case for decentralized stablecoins. Like there are some that are like FXUSD is one that touts itself as being a complete solution to the so-called stablecoin trilemma. Like they're capital efficient, they are very decentralized, and I'm blanking on the prong because it's been a long week. The third prong of that, but a lot of the decentralized stable coins are CDP stable coins, which essentially means that you have to like mint let's say Ethereum or Bitcoin or some sort of volatile collateral in order to mint a stable coin. And you can only be so capital efficient because most of them need to have some sort of buffer. So do you think that there is like sufficient demand for decentralized stablecoins that people are going to be willing to like take that like slightly different spread when they could instead find a nice, if you also imagine that stablecoins proliferate and we get some sort of like stablecoin regulatory framework, then you could probably go anywhere and get a stablecoin, right? You can go to like your local bank, you can go to PayPal, you can go to Robinhood. Like there would be a million like issuers, probably like Wendy's and McDonald's and Burger King will be minting their own stablecoins. You could just slide them in $5 at the cash register and get your stablecoins out. So will there be demand for decentralized stablecoins when it'll be so easy for anyone and their neighbor to make their own stablecoin?
Well, I think that is the reason there will be so much demand for these decentralized stablecoins. About 5 years ago, I was kind of framing this discussion as the tiny gorillas versus the 800-pound gorillas. Tether and USDC are the 800-pound gorillas. But one of the things that this technology does And it's really, blockchain is a part of it, but it's really been happening since the information revolution that started, the information technology revolution that started 30, 40 years ago. Is um, This technology allows you to essentially uh, uh, you have the means of production, the means of distribution, and then connecting that. And what it does is it essentially flattens that curve of the cost of producing something, the cost of distributing something. We've seen this, right? All the video business, YouTube, and all of its copycats now. Publishing, the same thing. It's even happening in healthcare and medicine, although slower because it's such a highly regulated industry. So, those forces have been sort of occurring now for 25 years, solid 25 years. Bring in decentralized blockchains, and what can you do with that? It's funny, somebody sent me yesterday an app that had it's kind of like restaurant reservations, and they're going to launch a currency. And I was like, I don't think this needs a token. But if you can build a network of contributors to an ecosystem, maybe there's 3 or 4 reservation apps plus a bunch of other types of institutional users using the currency. Now you have essentially a co-op for building for something that's actually useful for that ecosystem. I always kind of think back, Visa card actually pioneered this um, in the 70s. First it was Bank AmeriCard, and all the banks were trying to launch their own credit cards. None of them were getting off the ground because it's really hard to build a brand, and it's really hard to build a network and network effects. So what they did is they got 12 banks together. They partnered. That was the beginning of Visa. It started with 12 banks, then it went to 200 banks, and now it's about 8,000 banks around the world. So this idea of building a co-op, in this case, they were trying to do it around, credit card transactions. You're going to see those types of co-op models in AI and other industries. I mean, in a way, the Bitcoin community is a big co-op. It doesn't maybe call itself a co-op, but there are different factions that are cooperating that are, affecting the value of that ecosystem. Same for Ethereum and so forth. So it can be either highly defined or not. So answering your question, with all of this great technology, in a way, stable coins are being commoditized. You're going to be able to produce them. I mean, you go create a stable coin right now in about half hour for free. But several protocols offer this. Which is kind of like what YouTube did to video, because, I'd come from, television business back in the early 2000s. You want to launch a TV network, costs you $100 million. 10 years later, anybody can broadcast themselves from their living room, right? YouTube launched in 2005, and it was going gangbusters by 2010. So you're going to see that same effect with stable coins. Now, what is that? One thing that means is you're going to have, 99.9% of them are going to go to zero. They're going to go nowhere. But that little 0.1% of experimentation that's actually good, that's going to be a pretty big number. Just as it is a big number on platforms like YouTube and other, creator platforms. It's only about 0.01% of people that make a living from it. Everybody else is just there kind of hobbying and watching it and so forth. So, you'd given the FX USD example. I think there is absolutely a need for a bunch of these. The trick is, well, which ones? How do we know which one's going to win or not? And I think actually the right way to think about it is, even though the open stablecoin index is a basket of these decentralized stablecoin networks, the stablecoin itself is not what's going to drive the value. What I would describe with the stablecoin is like the lubricant for the network, for the product opportunity. I'll give you a few specific examples. Tether, founders of Tether. So Tether was founded by a group of fellas in Los Angeles in 2013-14 timeframe. They could not build a business out of it. It was not a business. Enter Bitfinex into the picture. The largest exchange at the time, a bunch of traders needed to stable up in between transactions, and Bitfinex had the network effects. They could make it successful overnight. So they bought the Tether, stable coin at that time. By the way, Tether still was not a business. It wasn't a business. It was not a serious business, a profitable business until about 2021 and 22, when interest rates were really high. Up until that time, it was just really a foundational component of the Bitfinex stack, later adopted by Binance and others. And then we're off to the races. USDC, same model. Launched by Circle, but partnered with Coinbase and then a top 5 exchange called Poloniex. It's not super prominent these days, or I'm not sure what's happening with it. Circle actually bought Poloniex for a little while. So that new stable coin offer, USDC, it offered more transparency than Tether, and immediately made the Coinbase.com product and the Poloniex.com product better. People could use a stable coin on those exchanges that wasn't Tether. It was more transparent and everyone was happy. Again, USDC, if you were to go back and look at their financial filings in 2018 and 2019, there was no money to be made from the stablecoin. They were making money from things like doing launch pads for investments and other types of capital formation types of businesses. One more example, the US dollar. So what I'm kind of getting at here is the stablecoin is not the business. The business is something else. It was Bitfinex in one case, it was Coinbase and Poloniex in another. And right now, interest rates are high and people are making money, but that'll be very sort of seasonal, so to speak. Another great example of this is the US dollar in Saudi Arabia in 1971. It's because of the arrangement to price global oil sales out of Saudi Arabia in US dollars that the US dollar has the network effects that it has today, that it became the global reserve currency. It's a key contributor to that. And so, yes, the dollar was working great for us before that arrangement. And then it gave the United States a lot more power after the arrangement. Not saying it's good power or bad power, that's a whole nother debate for another day. But that's kind of how it worked. And so what I would be looking at is paying close attention to the businesses that are deciding to use stable coin networks and how they're going to use them and integrate them. I created this, I kind of drew this out about a year ago, actually, for a presentation in Belgrade as a staircase of the different ways of building these network effects. And everybody starts in a different place. I won't be too long, but I'm just going to read to you kind of the bottom to the top of the staircase. And we can share this in like the show notes or whatever. First it's like your 100 true fans, that believe in the project. Maybe they're DeFi nerds. Then getting the stable coin on dexes, get some liquidity out there. Liquidity partnerships, these are like hedge funds and institutions that are putting up some initial capital to help prove it out. The borrowing, lending, and leverage apps, right? Get it onto Llama Lend or Aave or whatever. Get into some DAO and protocol treasuries. That's actually been a really hard nut to crack for a lot of stable coins. And then you get into things like fintech wallet integrations, institutional treasuries, centralized exchanges. And then we can go even further, and look at what are the growth industries out there, like AI or renewable energy, the metaverse, or space travel for that matter. And then you can even look at something like slow industries. Like, for example, here would be a really interesting example that someone's probably going to conquer. The multi-trillion-dollar shipping industry around the world uses bills of lading as a form of currency for all the goods that are moving in and out of ports on ships. And it's mostly an analog system. It's very old tech. If a couple of shipping conglomerates, shipping ports got together and said, and by the way, they're also using a lot of Tether, and maybe even USDC, but mostly Tether in some cases. But why should they be using Tether that's not sharing any of their revenue with them? Why don't they just create their own stable coin that immediately puts the underlying into yield earning assets, and they can earn whatever the risk-free rate is. That's how you bootstrap $1 trillion stable coin pretty quickly. And by the way, a perfect example of this, we just saw Ripple announcing the acquisition of, I can't remember the name of the company, but I think it's a prime broker that is moving trillions of dollars of volume a year. And my understanding of that is they're going to try to make RLUSD the primary currency that's moved around within that prime brokerage. So I think that's kind of part of the playbook. And then eventually you get to government, which maybe it becomes a CBDC somewhere in Europe or whatever, or it's like Wyoming trying to launch their own stablecoin. So there's this whole stack of different ways to go to market with a stablecoin. The US dollar started at the government part at the top, right? And it wasn't an easy ride. It only really got, they got past wildcat banking in the late 1800s. USDT Tether and Circle USDC, they started with centralized exchanges. And then DAI, one of our favorites, the DeFi native, they really started with helping people who were holding Ethereum get some money to go buy a bowling ball or a boat or whatever. So there's interesting ways for all of these projects to start, and the winners will find that so-called wedge and hopefully be able to maintain it and grow.
Got it. It's a very good, very thorough answer. Take a second to grab some water because we still have half an hour left, and got a lot of questions, I'm sure. Because one of the let's zoom in a little bit because I think you've done a really good job of setting the context of stable coins, and I think that you could probably honestly talk about it for months. So I hope that you launch a show through Open Stablecoin and do talk and give us frequent updates about the broader landscape of stablecoins. What I'd like to zoom into, though, is specifically the Open Stablecoin Index project, which is just a fun kind of on-chain experiment by a bunch of people, yourself, myself. There's at least a few dozen who have locked Squill to kind of manage and steer this project. And it's very much like a community-driven effort. So wherever the community says we're going to go, we're going to go. One of the first things that's been done is, there's been this launch of this DTF with 8 different stable coins in it. And what's cool about it is that there's a lot of really amazing on-chain infrastructure that the Open Stablecoin Index gets to lean into because, like you mentioned, the centralized stable coins are almost kind of playing catch up to the decentralized stable coins. So of the 8 constituent protocols, you got Frax that has amazing stablecoin infrastructure. You've got Inverse Finance. Obviously Sky Protocol, and just this morning, we've put forward a governance proposal to lean into the Curve ecosystem. And ordinarily we'd post it on gov.curve.fi. Unfortunately, there's still touch points with Web 2, so we weren't able to host the proposal on gov.curve.fi. So instead of posting it there like we'd normally do, we've posted it a couple different substacks around the ecosystem. I posted it on my X feed. So if anyone's interested in checking that out, just go to x.com/curvecap, Curve Capital, and you'll be able to read this and follow along. Could you summarize a little bit about what is the plan for the Open Stablecoin Index? Why is it applying for a Curve gauge? What would the Curve community benefit from in terms of, if it were to support this gauge, what would the Curve community get out of it? And where would the Curve community be helpful for assisting in Open's growth?
Yeah. Wow. That's a lot. I may miss something, and you may have to sort of give me a prompt along the way. So,
of course, yeah, I could ask leading questions too, because I helped
sure.
instrumentally with the putting this proposal together. So if anyone's listening and interested, by the way, please do drop questions in the comments and we'll take them live.
Yep. So right now, Open is traded on a Curve pool and a Uniswap pool. We'll focus on the Curve pool for this conversation. The gauge is so that incentives can be sent to the pool, and the incentives might be sent from the governance token Squill that's used to govern Open. could be sent from one of the partnering ecosystems. If you look at the list of the 8 protocols in the basket of open, some of them are very influential in the Curve governance ecosystem. And I think that's that's kind of like the main thing that's going to kind of continue is right now, if you're holding Squill, which I believe we also have a Squill pool on Curve. If you're holding Squill, you can either stake it on Open to participate in governance and get some fees, or you can just go LP it in one of the Curve pools. What was your next question?
I guess the question would be, like, how do you see this sustainably feeding into the kind of Curve ecosystem? Because
Yeah,
of course, that there like all these things are give and takes. So I'm sure
sure.
that the open community can support the Curve ecosystem, and vice versa. The Curve ecosystem can help support the open community.
Yeah. Um, the main, I mean, I think right now what people have shown a lot of interest in is liquidity. Having liquidity for open in the Curve ecosystem. Um, what else could be done from there as open grows? Could it potentially become a collateral on Llama Lend, for example? I think it's like really early to say like exactly how it's going to play out because Open, just launched a few weeks ago. It's relatively small compared to a lot of assets in the ecosystem. But for right now, I think incentives on the pools are going to be attractive to people in the Curve ecosystem, and then we'll see what comes after that.
Yeah,
And
absolutely.
CRV will continue to be, CRV is the governance token for Curve USD, so it's kind of a key contributor in the basket of open. And I'll say something else. I think actually is kind of important. It dawned on me a couple of days ago, um, or became more obvious. Right now, a lot of stablecoin projects, including some in the basket, they're chasing that TradFi dream. Eh, and they may go all in. They may steer a little bit away from DeFi, because there is a large opportunity in TradFi. What's really interesting about Curve, though, is it's true to its DeFi roots. You saw Michael. I just tweeted, I think yesterday or the day before, DeFi, and it's important. Like I think we're being short. People are going to be short sighted. Going after this TradFi opportunity. And it makes sense. They're just, it's like, oh, there's money over there. Let's go get that. But I think what's more exciting are the projects that are going to keep innovating in DeFi realm in an area where you have applications that require permissionless stable coins, applications that don't capture personal information, applications that are better because of transparency, not opaqueness. And so I see Curve for sure being a leader in that category. When you look at the basket of 8 stablecoin networks, Curve is a leader in that particular area, and I expect that to grow.
Yeah, I'll go ahead and weigh in a little bit myself. In that, like, one of the ways that this basket first came together was we put out some polls from the DeFi community, and we said like, what token should be in the basket? And Curve was number one. Like, it wasn't even close. Aave number two, and based on that, it was like pretty easy to figure out what should be at least the first few quote tokens in the basket. Yeah. As for this question of like where can open and curve have some synergies, like one of the things I've noticed from long time watching curve pools is that like the pools that are most successful really have like a sustainable long-term strategy for how they're going to be planning to drive liquidity incentives. Because there's this question: if you mint the open token and that's great, what are you going to do with it? Like, are you just going to like sit there and like look at it, or are you going to put it to work? And if you're putting it in the open WETH pool on Curve, well, the nice thing is it does get good trading fees because of the fact that you mentioned there's also that Uniswap V3 pool. The Reserve Protocol does use the Uniswap V3 pool for a lot of like arbitraging and just like kind of like the maintenance of the DTFs. So that's always going to see good volume. And then consequently, like as that sees volume, like it's very useful when dexes have multiple pools to trade against. So like that open WETH pool, by virtue of the fact that like there's multiple liquidity sources, means that there's going to be good trading activity. So putting the open in there becomes productive. Is that enough to make it worthwhile, or would you rather like you could own this basket of 8 tokens, or you could just like say, well, I don't care about the other 7, I just want Curve, and I know enough that maybe I could lock it as VECRV, or I could like trade it for a wrapper at a discount and get some cash flows. So inherently, a lot of these like tokens are competing against this like really DeFi savvy people. So there is importance in like driving fees to utility and activity to the WETH open pool. So there's a few different levers that, of course, we have to pull within the open community. The open DTF does get some fees, and some of those fees are in the long term going to be going to the Squid DAO, which is going to be using it for liquidity incentives. And then, of course, like we have the Squill token, which we want to decentralize. So it's a natural fit to give the Squill token for at least the airdrop period, and possibly for a lot longer, into the to the people who are providing initial liquidity here. So like take a look at the proposal that outlines some of the promised emissions of the Squill token that will be sent to those pools. But then another really key piece is there's those other 7 protocols. Like I'll just take Reserve as an example, because we've been talking with Reserve a little bit. The Reserve community has been super helpful, of course, in getting this off the ground, and they would like to help. And one of the things that Reserve has is a large basket of Curve. I think they're one of the top 5 holders of VECRV. So they want to make that productive. And if you ask them, hey, can you help us to direct liquidity incentives to this pool? They say, yes. Is there a gauge? Can we just vote for it? That would be the preferred way to do it. And we have to say, yes, we'll hope. Gesundheit. I hope you're not allergic to anything I'm saying here.
No.
So Reserve would very much like to. We have to pass the gauge first. So like that's just one. We know Frax has a lot of VECRV influence. Like if you look through the entirety of this basket, like they all recognize that open is a great project, and the more that we can like lean into the synergies and get all 8 of these protocols potentially interacting together for the benefit of DeFi through the open stablecoin index, like Curve could actually be the hub by which some of that happens.
Yeah, a lot of exciting. I mean, hopefully everyone who's watching or listening will go and take a look at that proposal and participate, and we'll be, I think, off to the races. One more sort of step up for the open stablecoin index and its sort of growth in DeFi.
Yeah, very much so. So, this is kind of the comment period informally. Ordinarily, we'd be gathering comments on the Curve governance forum and addressing them there. And until the Curve governance forums comes back, then just drop your questions to us. We'll feel free to answer them. But presuming there's no like major revisions needed for this draft, be on the lookout, because we'll hopefully get these votes going live early next week. So, all right, I'll go ahead and get off my high horse about Curve, because you know me. Like if I start talking about Curve, I'll just talk about it for the next like 5 hours, and you'll say that you want to get out to do some other stuff. Why don't you talk a bit about some of the other protocols in the basket, if you have any thoughts about the other 7 protocols that make this up?
Sure. Well, Liquidity has their V2 launch coming up soon. If it might have even happened yesterday. I want to say that it was May 15th yesterday. But the Bold stablecoin is sort of the next version of Liquidity USD. It comes with some benefits, some traits that the previous experiment did not contain. Was it yesterday? 19th. Okay, so we're about 3 days away. Yeah, and you could see if you go back to the index screenshot, something. I don't know if this is up because of the forthcoming launch or because of something else that's happening in the Liquidity ecosystem. But the first thing you notice, we said earlier at the beginning of the podcast, it's an equal weighted index. Everything should be 12.5% weight. You see Liquidity here is at 15.7%. What's happened there is the price has moved on Liquidity since it launched. It's moved upward. And so Liquidity is essentially first on the leaderboard. But I think a lot of people are getting really excited about the Liquidity V2 launch. They just finished up some audits with Cantina that have gone really well. And so, keep an eye on that. I'll probably write up something more detailed here at the end of May on all 8 of the protocols, what's moving in their ecosystems. But just at a high level, I'll mention a couple of things here. On FracShare, they have a North Star upgrade they've been working on for some time now, and a little bit of a rebranding effort, as well as a new emphasis on something called Frax USD. That's going to be kind of their hybrid stablecoin that's going to have a lot of TradFi compliance as they sort of go after that market. They'll still have the Frax stablecoin. I think it's gonna. I think it'll still live on mainnet. But Frax USD will be their primary going forward as they try to take everything they've learned in DeFi and apply it to some of the opportunities in TradFi. Just looking here quickly also at the list, but that was Sam Kazemian, the founder of Frax, who's just a token 2049, about a week ago on stage talking about this. Aave, is just incredible. One of my favorite projects. I did a deep dive with him about 6 months ago, and Aave, now the largest. I think it is the largest crypto lender in the world. Period. The TradFi lenders, Aave is bigger than all of them combined. They would hate for you to say that, because the TradFi crypto lenders, the middlemen lenders, they want to get their fees and tell you how having a custodian is better and so forth. But I think Aave has just been an incredible case. And they have 2 businesses right now. One is the lending business, and the other is the Go stablecoin. It had initially a rocky start, but it's funny. I told, I think I told Mark or Stani, when I did this deep dive 6 months ago, now I'm like deep into Go. So that's the trick, guys. Whoever's launching a protocol, just get people to do a deep dive analysis on your protocol, and the next thing you know, you'll find they happen to hold your stable coins or whatever asset that you're launching in your ecosystem. It's got such a nice integration. If you're depositing collateral on Aave and you want to borrow stable coins, it's cheaper to borrow Go. And so that's worked really well for them, and it's doing great in Aave. They also have a V4 protocol launch coming up, which a lot of people are excited about. And I think they've also announced a TradFi oriented initiative called Horizon. I need to study that a little more, but Aave is for sure one to watch. Next up, Sky Ecosystem, formerly MakerDAO. Been a little bit of drama in the ecosystem. One of the things that I think is important, and it's a little difficult to keep up with. Wait, should I buy this? Should I get the Sky token or the Maker token? Should I be using the DAI stablecoin or the new USDS stablecoin? What are the differences in those? We're going to try to really lay that out in some posts going forward. But I think one thing I'm hearing in the Sky ecosystem is they're going to have kind of a forced transition from Maker, from MKR as a governance token, to Sky as a governance token starting in September. There'll be some incentives to do that. So I imagine that's probably going to mostly work according to plan. I think there was some information this week that DAI actually had a larger TVL than USDS. I think that has something to do with some of the inefficiencies in the market, but I suspect by the end of this year, the Sky team will be where they be in a much more clear place with Sky as the governance token for the ecosystem and USDS as their leading stablecoin. I think even USDS has, with their savings rate, has outpaced Athena at this point. USDS is kind of the best place to get yield in size, and so that's one of the things that's working well for them. Athena is in the basket. One of the challenges is Athena has a lot of token unlocks, a lot of dilution, has had in the last year, and will continue to have for the next year. But Athena is also doing some really interesting things with Securitize. They're launching a blockchain specifically around this with them for real world assets. Athena also has a increasingly close partnership with the folks at Tether. So I think you're going to see Athena definitely make some headway into the TradFi world. On the DeFi side, I'm still kind of looking for it, but we'll see in due time how that plays out. Reserve rights also in the basket. RSR is the ticker. The Open Stablecoin Index was launched on the Reserve protocol, so that's kind of cool. I think Reserve is around a $300 million TVL. They have a number of stable coins in their ecosystem, as well as these, they call them DTF, decentralized token folio. So yes, are you DTF? That's what it means. It's like an ETF, but it's in crypto. And what's really interesting about this is, all of us here probably on the call, a lot of people here have been in crypto for a long time. If you made it through crypto winter and you're still here, you're kind of like you're basically OG status at this point. And the interesting thing about the people who make it through the crypto winners and the OG status people, they're kind of the more active users, right? They have lending positions and LP positions, and they might be checking them daily or weekly or monthly. DTFs are, it's like a really interesting question to ask is, well, who are DTFs for? Are they for these DeFi people? And I'd say the answer is kind of. It's really, index products have done really well for passive investors. And if you were to go look at the last, let's call it 40 years of active versus passive investing in equities in the United States, passive surpassed active in 2019. What does that mean? It means the majority of people who own stocks own them in an index fund or an ETF, not owning the securities, outright specifically. And so, and indexes have performed really well. It's a really great way to set it and forget it. So for people that want passive exposure to a sector or to a theme, or to just Bitcoin for that matter, the Bitcoin ETF was the most successful ETF launch in history. And now you're seeing this with DTFs on chain, like the Open Stablecoin Index, which is a basket of stablecoin networks. There's some other really cool index products. Bloomberg Galaxy, they have I can't remember if it's 20 assets or 50 assets in the index, but that is now tokenized on chain if you want access to a wider DeFi index. So that's pretty cool. So Reserve's working on that. Curve, we just talked about. Garrett gave a good sort of Curve Cap gave a good sort of unfolding of all that. And then the last one we have here is Inverse DAO. Interesting with Inverse DAO, a couple things I've noticed there is one, it's been really great to work with them. They've been sort of really bullish on the Open Stablecoin Index. So thank you to the Inverse DAO ecosystem. I think they've also recently seen their staking rates for SDOLA go pretty high. I want to say maybe it's over 25%. And I saw an announcement. It looks like Inverse DAO, they may be launching a new platform. I think it's called Monolith. And it's a permissionless platform for anyone to create their own stablecoins. So just like we we're kind of talking about at the beginning of the show, you have these platforms. Reserve Protocol has a platform like this. Inverse DAO is going to have a platform like this. I haven't studied the Inverse DAO platform yet, but and there's several of these platforms out there. It's becoming very easy for anyone to come and roll their own asset-backed currency. So I think it'll be really interesting to see where Inverse DAO takes this over the long term. But one last thing to say, that's everything in the basket. What's for me, I'm not an academic, but I come at this a little bit from an academic standpoint. It's really interesting to take an index of these projects and to look at, well, how are they all executing? I talked about that staircase of different integrations to get to product market fit. How is each one going to market to get their sort of piece of the puzzle? And so sometimes I describe the open stablecoin index, as a storytelling device. When you're looking at 8 projects like this rolled up as one, you can start to see a story forming, and that becomes a story forming on positives and negatives. What's growing these ecosystems versus holding them back? And I think maybe this is a topic we're going to get to on the show today, but the index has room for 2 more projects. So I'm hoping the folks that are listening or watching the show will participate in that governance proposal, because open rebalances every quarter. And that's an opportunity to take a second look at which tokens are really living the values of transparency, composability, and user-led governance versus projects that may not be. Plus, some people in the community might want to have projects with a lot of growing room. And if that's something you care about, then you should get involved in governance.
And can you talk any more about the governance process, or are you all talked out already?
No, I think we can. We should talk about it. If you don't mind, would you put that proposal on screen? Can you do that?
Yeah, let me do that. This is the
index regenesis.
Yeah, I'm trying to the Google Doc, right?
No, it's in the governance forums. I think it's an open stablecoin index tweet last night. Should be up there.
I have a million tabs open, as you might imagine.
No worries. Well, I'll fill up some airtime here and tell people what this is. So, open stablecoin index. The forums. By the way, the forums are on the Reserve Protocol forums. So if anyone's wondering why is that, the DTF is launched on the Reserve Protocol, and there's some nice network effects with the Reserve community, and it's just easy to do. But yeah, this is the proposal. As I mentioned, the open stablecoin index rebalances quarterly. And, the experiment's been live now for about a month, and the index is up 47%. And it's interesting. I think I was debating this with someone in Lobster DAO recently about why would I do the open stablecoin index when I can go and stake the assets myself and get some yield? And that made me think of a couple of things. Was that one of those could be, well, maybe the open stablecoin index should hold staked assets that are yield bearing. Could be an interesting solution. So if you're watching this and you want to participate in governance and make that proposal, or any of the existing projects that are in the basket, like Inverse DAO, maybe SDOLA. I'm sorry, maybe your staked Inverse assets, or the staked governance token for Athena or something else should be in the basket, as opposed to the naked governance token. I think there's some trade-offs on liquidity and maybe some other concerns, but that might be an opportunity for the community to talk about it. Should the basket have staked tokens in it? But yeah, the basket's up about 50% since it launched. It's about a $370,000 market cap. It's compounding about 50% weekly. Cool looking chart here. Feels very open to me. I like it.
Some technical analysis, drawing some line charts here. See where you got the logo from.
I like it. Whoever came up with that logo, that I can't remember. Yeah, our guy in the community, Grant, that kind of nailed that. So let's see. There's about 59 holders of the open stablecoin index. There's 22 governors, which is actually quite a high number. As anyone who's paying attention to governance for smaller protocols, and we're tiny, open is fairly tiny. 22 is pretty solid. And then the post here just kind of goes on to talk about this future. The U.S. Treasury is expecting stablecoin market cap around $2 trillion in 2028. that probably is an underestimate, but at any rate, this is an opportunity for a lot of boats to rise with the tide. Some will for sure take more share than others, and it might in fact be the central issuers. But if a DeFi stablecoin, Go is at, I want to say 200, maybe $250 million TVL today. Maybe Go is $2 billion in a couple of years. Maybe it's $2 billion by the end of this year. Curve USD, I want to say, is around 185 or 200 right now. What if it 10x's during that time? So that's very exciting for the protocols that are in the open basket. So essentially, what's happening over the next 5 weeks here, if you were to read the proposal, is you could kind of call it a beauty contest for anyone in the community to nominate protocols to join the basket. It doesn't cost anything to join the basket, by the way. You just got to get some votes, which and the votes will come from based on the rationale. So if you're a protocol that's watching this and you'd like to be in the basket, you'll read this proposal and see, oh, let's just put together a request for comments, share some basic information. How does the stablecoin work? What's the use case? What's the liquidity? Why would it be good for the open basket? And then we'll let governance decide on, who might join the basket, for Q3. By the way, one thing to say is even though the open stablecoin index rebalances every quarter, it's not really intended to switch out a lot of the assets in the basket. Hopefully the community is choosing the best assets for the basket for the long term. But from time to time, it might do that. If, for example, there were a project in the basket that was underperforming and the community felt like there might be a better replacement, then that's totally an option that's available. So yeah, read the proposal. You can see here in the next steps, if you agree or disagree with anything in the proposal, drop a comment. If you want to simplify, if you have ideas to simplify the process, drop a comment. And then if you want to nominate a protocol, all we need is a name of a protocol and a kind of a one-line description of why they should be included and what their relevant stablecoin is. When I say we, I mean the community. If you want to provide more, that would be good. And then from there, and you could drop that comment right on this proposal. From there, either you, the person who added it, or someone else in the community can reach out to them and invite them to this process. Again, it costs nothing to do this, and it could be really exciting for the open stablecoin index going forward.
Yeah, and I will just reiterate that the 22 some governors is pretty good for a project that is, as you say, minuscule, and it's already been fairly active. So there actually has been a large amount of governance proposals for relative to the size, and some of these had a very short window to vote, and we got really good voting during that. So it's good to see that the people are very active. The DAO is actually working, so please make your voice heard. We got a good question coming in on the curve gauge proposal, which is asking if this means for curve emissions like from voting, confused as there's already squill incentives flowing on the LPs. Yes, we are trying to hook this up to the actual VECRV curve emissions. As we mentioned a little bit earlier in this show, we have when we did the squill airdrop, there's a total supply of squill of 10 million. The first phase of the airdrop released 1.776 million squill. So that is some of that was earmarked for liquidity incentives. So we have at least 12 weeks of squill incentives that are going to be flowing to the pool. But there's also protocols that have VECRV and would like to, or the ability to steer VECRV and would like to steer some curve emissions to the pool as well. So one of the rationales for hooking this up is just to make it easier for some of these constituent protocols to be able to help us to grow the open pool with some curve emissions. But the squill emissions is hopefully going to be a nice early bonus for anyone who is minting open in this kind of early stage and helping us to LP. So thank you, Spencer, for the question. And we see you. We see about 500 of you watching on X. I'm sure some of you have questions, or some of you just want to leave a funny meme or whatever. As you can see, we're reading the comments, so please do ask us. James, I only booked you for an hour here, so I'll wait a minute or two to see if any final comments roll in. Just any interesting thoughts about this that you haven't gotten a chance to drop yet?
Well, I would say if anyone's watching or listening that is noticing projects, stablecoin networks that are um, kind of prioritizing machine economies, particularly the AI boom and what might happen there when you have AIs uh, coordinating autonomously, potentially creating their own currencies. I'm very interested in studying more projects like that. Those strike me as ones that should potentially be in the basket for open. There's one in particular, GAIB. I think they're backing the stablecoin with GPU capacity and fees from the network. I haven't studied it enough though to know, kind of where they are in their process, but curious about that one and others like it. I think there's going to be many. Also very excited about Cap Money. Um, Doing some interesting thing that they're leveraging the power of DeFi on one side, accessing TradFi on the other. Yeah, and there's going to be more of those. So if anyone's listening or watching and you have suggestions of projects that should go in the basket, please do leave us a comment on the forums so we can start tracking that and maybe they can be a part of the Open Stablecoin Index.
Yeah, one thing that's very exciting as you talk about this is to realize that if we do see stablecoins proliferate, like credit cards have proliferated for companies, it would be entirely possible for Open to launch additional stablecoin DTFs. Like you could actually see it segmenting into like an open stablecoin DTF that's just the decentralized stablecoins, and maybe a closed stablecoin DTF, which represents the ones that choose to move more on chain, or AI, Internet of Things type DTF of stablecoins. So, as the Open Stablecoin Index gains some mastery over this DTF process, and shout out to Robo Odin pointing out that is very happy to see a DTF move outside usual memes and into solid DeFi. Hear that, Bloomberg? You've been called a meme DTF. The move is yours.
Nice. By the way, another interesting angle too is people are talking about tokenizing Coinbase, tokenizing Circle once it goes public. Um, you know, uh, the, so how about tokenized securities in a DTF? That might create some interesting conversations for first we have to see those actually be tokenized on chain, but it seems like that's coming. And then, wouldn't be long before someone rolls it up into an index. Who knows? Maybe it ends up in the Open Stablecoin Index. I think what's interesting about open is the definition of open is open because we don't really know, like the open is on a spectrum, right? There's completely closed on one end and very open on the other end. It's like decentralization, right? Even some of the projects in the Open Stablecoin Index, some are more decentralized than others. So all of this is operating on a spectrum. And it's not up to me to tell anyone what the definition, the criteria, so to speak, are of what is open and what's not open. I think that's going to be really up to the collective to decide. Oh, we like the trade-offs here. We want it in the basket, and some things are going to look more open than others, and we'll see how that kind of unfolds over like the next many months and years.
Excellent. It's always great to talk to you because you have such a commanding understanding of the details of the space, but you also really see the 30,000-foot view of it and can couch it in a theoretical perspective. So, it's been great having you sit here and teach me things about stablecoins I didn't know. Any other parting thoughts that you want to get off your chest?
No, I don't have anything else. I think I'm good.
Where should people find you?
You can find me as 0xJMG on X, aka Twitter. That's the best place. And then from time to time, I'll write at furthermore.co if you want to go look at my deep dive on Aave or a few other projects.
Excellent, excellent. You definitely recommend to read it. Fantastic writer. Also, definitely recommend to check out the QR code in the upper left-hand corner. That for those of you just joining us, is our sponsors for the week in AIOZ. They embodied the decentralization that Open and many others are looking for, but they're on that storage AI compute object pinning side with their DEPIN network. So maybe, who knows? Maybe they will end up being in a future Open basket. We'll have to see. That link will take you to the Discord. It's also on the leviathannews.xyz website, where if you would like to get that gorgeous QR code for yourself, we have auctions for them every week using the same as the Llama's auctions. Robo Odin, thank you so much for telling us that this was a great Llama party. Absolutely. I speak for everyone when I say we want more James, so I hope that you are coming back much more often. Friends, it is Friday, May 16th, the first day of the rest of your lives. Let's go out and everyone make it a great one. Take care, friends.